Hey you guys, it's Janine here from the Wealth Building Academy, and today I wanted to talk to you about what a good credit score is and how to improve yours. So I wanted to start with what range a credit score can actually be between and what a credit score is actually used for. So your credit score is used to extend you more credit in the future if you're taking on something like a mortgage or a car loan. In some circumstances, they also may check your credit if you are looking to rent a place. Your landlord could ask for your credit. And in some situations, you'll be asked for a credit check to be approved for financing for something like a car loan at a dealership. Now, your credit score can be between 300 and 900 points, 900 being a perfect credit score, but it's not something to aim for. I've never actually met anyone with a perfect credit score. Just typically in the high 800s is kind of the highest I've ever come across. Now, if you have a credit score between 660 and 724, that's considered a good credit score. So that's kind of where you want to aim to start getting your credit score to. If you have anything below that, don't worry. You will only really need to have a credit score if you're looking at taking on more debt. But it is something, as we become a more cashless society, that we all should look at improving, especially if you are below that 660 mark. If you're between 725 and 770, you're considered a very good credit score. And if you're above that, then you are considered an excellent credit score. So really moving into that 800 mark. Now, there are 5 different areas that actually do affect your credit score. So it's important to know what aspects you can change, how you can change them, and how those will actually affect your credit score. So the first one is payment history, and this makes up 35% of your credit score. When we're looking at payment history, we want to make sure that we are making at least the minimum payment on all of our debts on time. So that includes student loans, that includes mortgages, as well as credit card payments. So make sure that you are paying those on time, as that makes up the largest chunk of your credit score at 35%. The second largest area is credit utilization, making up 30% of your credit score. Now, credit bureaus, when they pull your credit report, are looking for your credit to have a utilization of 30% or less. So what that means is if you have a $1,000 credit card, you want to make sure that when they pull that credit score, the balance isn't over 30% of that $1,000 or $300. Now, it is important to make sure that you aren't paying off your credit card the moment you charge something to it, as that means there will be nothing reported to the credit bureau. So make sure that you are not paying off your credit card until that statement has been created, and then make sure that you're paying off the balance in full if you can, or at the very least that minimum payment. And if you're somewhere in between, try and make sure that that amount sitting on your credit card is around or below that 30% utilization. The next area that affects your credit is the length of time that you've had a credit card open. That accounts for 15% of your credit score. And unfortunately, other than not closing credit cards that you've had for a long time, this one kind of just ticks along and increases your credit score as you've had your credit cards open. So it's really important that if you're looking to increase your credit score, that you don't close your longest standing credit card. Now, this can be important to look into if you are planning on purchasing a home in the next year or so. You'll want to start to increase your credit, as there are specific rules, and I'll link the video I actually talked about the CMHC rules that have been updated to include your credit score in qualifying for that insurance. The next area that affects your credit is credit inquiries. So there are 2 types of credit checks: soft checks and hard checks. Soft checks do not affect your credit score, but something like a hard credit check, so if a bank is looking to approve you for a mortgage or a auto dealership is looking to approve you for a car loan, those are considered hard checks, and those do affect your credit score, lowering it for the more credit checks you get. But this is only 10% of your credit score, so not something to really worry that much about. That being said, if you are going car hunting, make sure that you don't let the dealership just run your credit without talking to them first, because they can definitely run it for a variety of different lenders, and each of those lenders are going to pull a hard check on your credit. And if you're going to multiple places, that can mean dozens of checks on your credit, which can really drive that score down. Now, the last area that affects your credit is different types of credit. So if you have only ever had a credit card, then you only have one type of credit on your credit report. Now, this makes up about 10% of your credit scores. Now, it is important to start diversifying that, whether it's through student loans and a credit card, or getting a line of credit and borrowing off that for a couple of months and then paying it back, or looking at something like an auto loan or a mortgage that can really help diversify those different types of credit. So at the end of the day, there are 5 areas that affect your credit, some being weighted more heavily than others. That being said, it only is really important to focus on your credit score if you are looking at getting more credit in the future, or you know that your credit is going to be pulled for something like a rental unit down the road. One of the ways that I really like to use technology to manage my credit score is actually through an app or a fintech company called Borrowwell. They offer free credit scores for their users, and this is not sponsored, it's just what I've been using to manage my credit. They have the ability to pull your credit score, your credit report, and there's also a little credit coach that uses AI and machine learning to help you increase your credit over each month. You can also get your credit score, your credit report using TransUnion or Equifax. A couple of years ago, it did cost money to get your credit score through them, so I would recommend trying to find a tool, whether that's Borrowwell or through your financial institution, that will allow you to get that credit score for free. If you enjoyed this video, please give it a thumbs up and subscribe to my channel. And if you have any questions about your credit score, please leave them in the comment section below, and I'll see you next week.